Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, June 26, 2020. I wanted to do an update on the broad market, keep it relatively short, but I do want to go over some sectors, some key stocks, and that'll add a little time. Time permitting at the end, I'd like to touch on gold, silver, and crude oil, just really the main asset classes I've been focusing on right now, which are the stock market, equities, crude oil, one type of commodity, and gold, precious metals, and or commodity. You could really lump it into either category. All right, so we're going to start out here with QQQ and SPY. We'll start out with the 60-minute charts. Today is a good example. I've often talked about the benefits and why I like trading futures, or at the very least, if you don't trade futures, and I get it, they're not for everybody. If you're going to trade index ETFs, SPY, QQQ, IWM, I think you're doing yourself a disservice by not watching the futures charts, or at the very least, most brokers will give you free futures quotes and charts if you have like TD Ameritrade will give them to you, even if you don't trade futures. I don't know, maybe you have to have a futures agreement with them. I'm not sure about that. I do, keep counts there. I keep some money there just for the charts, and they do give you the futures. But investing.com, that's a platform that will give you free real-time futures. Or at the very least, keep an eye on the indexes in the pre and post-market session. So what I'm going to do is toggle on. So you can see here, remember yesterday, we had I had two scenarios, both bearish. The less bearish just had a little kickback first on SPY and QQQ, with the Qs going up here to 246.93 and then reversing, or a drop down, without doing that, and that's obviously the one that panned out. But again, it's just one more example in the pre-market. It's like I'd like to use the analogy fishing or boating with polarized sunglasses. If anybody that boats or fishes knows the difference, you can see things down through the water. If you're ever in a sporting goods store, sometimes they have a kiosk. You put on the polarized glasses, and it's a little whiteboard or something up there that will show you what it looks like. It takes the glare away, and you can see things that you can't see without the polarized glasses. In other words, you're seeing down in the water. It reduces the glare, rocks, fish, all that kind of stuff. And I use that analogy for futures, because you're seeing what's going on around the clock and in the pre-market session as well. You can see, although QQQ didn't hit that target yesterday before the close, we closed right here, then it worked up and it did hit it in the post-market session, and then it hit it again today. And pretty much it traded all last night and the after hours post-market session and all morning there, offering multiple objective short entries, or if you were long and you were looking for a bounce back into resistance and an objective exit. And like I said, there were no guarantees it would work, but I can guarantee that was objective to short there, especially in light of the recent sell signals. Remember, we had the sell signals recently on the broad market on the SPY daily chart, and then we had this breakdown here on QQQ, that sell signal. And so far, this has all the makings of just a counter trend rally. First wave down, counter trend bounce, nothing goes down forever, and next wave down, and now we're at that 240.56 support. So there it was, and even if you're just an active trader, that's good for 2.5% so far on the Qs. So we're at support. I'm going to go over the levels to watch, and then SPY, same story. Again, I have the after hours trades turned on here. If we don't, well, actually, SPY did hit that level, 307.13. And again, go to the penny. This is a 300-point security. That means every point in the SPY is less than 0.3% move. And so that's those little moves through there. Effectively, you can see that that's where it stopped cold yesterday at the close, and then traded all afternoon and the evening after our session. Futures went down a little overnight, came back up this morning in pre-market and traded there again. So multiple objective short entries, and then boom, once the market opened, traded for a little while, and then some impulsive selling now. So that's it. It's a rejection at resistance, and you can see the support level. So just like the Qs, we're at support right now on SPY right now, minor support level. But the way this kicked off, I still suspect we'll get some more downside, the targets that I laid out recently. Okay, in stock futures, I did post an update on the home page. I had the first post this morning with the index charts, SPY, QQQ, in pre-market, and then as well as an NQ chart highlighting what was at the time a potential head and shoulders pattern. Now it's confirmed. We don't have a sell signal yet. I'll talk about that in just a second. I slightly tweaked this trend line. I had it, I think, off this candle. I moved it up a little higher. Why? Because I wanted to come in and capture. I think this is the better fit. Trend line drawing is an art, not a science. It is subjective, but I just want to point that out. That's the revised neckline I have. And so what you have here, for those not familiar, this is a complex head and shoulders. You have a complex head and shoulders just has two shoulders on one or both sides. So you have left shoulder one, move back to the neckline, left shoulder two, and see these impulsive drops off the shoulders. Particularly, I think a lot of people fail to scrub these patterns with volume. Ideally, you want to see impulsive selling on increased volume off both the head down to the neckline and off the top of the right shoulder, and that's what we have. I can turn on the volume and show you. I didn't even put the volume bars up, but I could tell you there's high volume, and there's high volume right there on the selling. That's what you want to see. Again, it helps to confirm it. Does it mean or guarantee it'll play out? No. It's just something you want to look for, and it increases the odds that it will. Now, all right, so let's talk about sell signals. Remember, now we just have a fully mature, and we could get another shoulder. The pattern may even fizzle out, not even play out. We don't have a sell signal yet. You might say, well, Randy, didn't we just drop below there? Yes, but this is what I call momentum fueled overshoot. You almost have to expect that. I would have put the odds at well above 50% that even if this neckline holds the support, that we would have shot below it, and we have now. Of course, I can say that in hindsight, but that's because you have a near vertical plunge, very impulsive selling, and that's, again, what I call momentum fueled overshoot. A lot of momentum heading down there. You're going to cut on through there briefly and then come back up. So now we're just about on that level now, so basically what you have is a fully mature pattern. We could bounce, put another right shoulder. Ideally, you want it roughly symmetrical. It doesn't have to be perfect, but it'll look something like that. You don't have to have two right shoulders on a complex head and shoulders pattern. You could have just two over there, one here. The important thing is we're looking for now an impulsive breakdown below the neckline, and it could come from here. We could keep going, but again, you also hit price support. These are the same lines I've had on here for a while. 98.43. And then below that you have 97, 95-ish right there. But based on the scope of the pattern, should it play out, and I would expect it would, based on everything that's happened on the daily charts recently, not just this, the fact that everything I just started with, this appears to be a counter trend rally. But you take the measurement or measured target for a head and shoulders pattern is the distance from the top of the head down to the neckline added to wherever the pattern breaks down. So that would give you, and I'm not doing an exact draw here. The way you want to do that, the way I like to do it easy, no need to take out your calculator and try to calculate the difference of 10,300 down to wherever that neckline is there. Just draw a trend line like this. Have it come down to that level. It'll be about right there. There it is. And then click on your trend line. It's hard on this chart. My trend lines are pretty thin. You probably don't see it well. And just say duplicate it. Create a parallel trend line with the selected trend line. Somewhere it should have just done that for me. Let's try it again. Create parallel with selected trend line. All right. It's popping. Oh, it's right on top of it. There it is. And then you drag that trend line, put it down there, and that's going to give your measured target. Maybe there's a little bit of support down there, so I'll add a level. It's worth noting right here. Why is that? I see reactions here, reaction there, and a reaction high there, and that's the measured target. So we'll see if that plays out or not. But we need to see, a solid break above there. So let's now look at ES, see what it did. ES stopped cold. These are the same levels on this chart for the last week or so at least. 30, 80, 52 right there has capped all that. And it's not mere coincidence that this was a resistance level I had on the chart. that coincided perfectly with that resistance level on SPY that it hit. That's why you have these reactions. That's that same showing you where the futures traded yesterday and this morning at the same level. And again, it's pretty well defined. A lot of reactions we've had off that level in the past. And so, for futures as well, the catalyst for the bounce was a small divergence here, pointed out before. Bounce, and we're heading back down. So we're now right at those previous lows. Reaction lows are usually a support level traders will look at. So probably get a little consolidation here, maybe a bounce. And in fact, we are consolidating. If you look at a 1 minute chart, we're kind of holding around that level. Nothing much so far. But again, whether we bounce, and if we do bounce, same thing holds true in reverse. You look for resistance levels. This one's not as well defined now, but it is the next resistance. And possible to head back up there. That might put in that second right shoulder on the cues that I just talked about a minute ago. Anything much above that, it's just going to muddy up the charts. That's all I can say. It's not going to eliminate the chance that we go lower, but it's certainly going to decrease the chance that we have another major leg down, if that makes sense. Okay, and why do I favor a bounce here? Well, as I showed you a second ago, we have NQ. That's not NQ. This is NQ. NQ at support. A little overshoot there. You had the ES at support, the reaction low, SPY. And then, most importantly, I'm watching this one very closely. XLK, the tech sector. As I often say, until and unless tech breaks, the market won't break. So tech, I mentioned the other day, this level, 101.79. It's not a super duper significant level, but it is significant. Significant enough. Why? Because we have a cluster of candles right here, and we don't have to have an island gap down. It's an island of candles. Well, it's a cluster right there. But what it was a breakout. We had this previous high. We attempted there. There was a failed attempt there. We went above it, but then failed the next day. That was a false breakout. Then we got it back above there again, and we recently went above that high. And we left that little doji there. Actually, there's an island, little tiny island top. But more importantly, I'm looking at just the fact that it's been support recently. The buyers have been stepping in here every single day, except that one with the little doji, since right here on the 16th, June 16th. So that's 1, 2, 3, 4, 5, 6, 7, 8 candles that the buyers have come in and defended that level. So there's the battleground, and we hit it again. Buyers have been stepping in before. Looks like Pavlov and his dogs. You ring the bell, the dogs, come, salivate, expecting the food. So will the same thing happen? Now, the buyers really haven't been rewarded lately, and that's the thing. They've been stepping in here, but they haven't really gone very far. Again, it's a trading range. Let's not make too much of it. So let's just say that's simple. When you get these trading ranges like this, especially with this one because it's a breakout to new highs, bulls want to see that taken out. This would be bullish to clear that range after back testing that level, and bears want to see this. And as I like to say, the redder the better, the bigger the drop, because that will then give you the failed breakout. I'm talking about the breakout above that all-time high right there, that attempt there. And so that's it. So there's your next objective short entry. And if and when that goes, and when it goes with conviction, remember this is a daily chart here. All that really matters is your daily candlestick close. You can get a head start, a jump start by looking at a 60-minute chart. Put a line there. You can wait for a 60-minute close. That would be a faster signal, but it has just a little higher chance of being a whipsaw signal. There's your head and shoulders pattern too on XLK right there. It's pretty nice looking. It's a flat neckline, and again, it's the same support level. So that's what we need to see, guys, for the next to open the door for another leg down. I'll tell you, I think we get it, whether we do or don't. But again, everything else here on this chart, these divergences have been building for a long time. They haven't gone away. This was a divergent high right here, and so was this. There's your divergent line right there from this peak right here in the PPO to this lower peak, this peak in the RSI to this lower peak, against these prices making a higher high. Lower lows or lower highs on the indicators, higher high on prices. That's negative divergence. So that's it. One more. I did get an alert on Facebook, but it's probably going to be a whipsaw. Right now, it's not. We're still under there. Facebook is down 6.37%. That's a big drop. We haven't seen a drop like this, the size of this red candle, in Facebook in a while. And what it's done is taken us below. You remember, I've covered the fangs lately with some yellow lines, which are the ones we need to see break. And as I said, you need to see not just one fang. You need to see the majority of the fangs break down. This is a breakdown, but it's a daily candle. We're really close. The market's at support. XLK is at support. So this could be a little whipsaw signal, momentum fueled overshoot, but I'm watching that level. If Facebook cannot recover that, especially if we go down this point, since we've already overshot it, I think what would do the trick is a breakdown below today's lows. The low is 218.48 right now, so that's one definitely to watch. You know, this divergent high tells me it's probably going to happen, but again, these fangs have been resilient, and that's almost an understatement to say they've been resilient, but that's what it is. There it is on a 60-minute chart. Again, I had these purple lines. We broke trend, but I had two lines from before. I had both the trend line, and that didn't do it. It wasn't impulsive. We backtest and were rejected, but then we've been moving sideways. So it's the common theme here. You know, this is kind of a battleground recently between bulls and bears, and you know, whichever one can take it up or below wins. That's the way I look at it. There's your first target or support on Facebook if you wanted to short Facebook. If the market, you need to get confirming signals on the market. You need tech, XLK, QQQ, SPY. They all have to break down. Otherwise, it's possible but doubtful you're going to get that 10% or so drop in Facebook. Okay, short video, so I'm going to just roll into crude real quick. That crude, this is where I thought it was an objective entry. It was objective, it didn't work out, but we went up from my next resistance level. Same lines I've had on the chart, 39.48. Pretty big, very big level. A lot of reactions when I go from across to the left on this chart. A lot of previous reactions, and we went up there, and it certainly capped crude with another leg down. So it's looking a lot like this divergent high. Nothing goes down forever. You get the initial leg down, you get a kickback rally, next leg down. This looks like wave one down, second wave up, and the start of what could be another wave down. But again, we're going to see the stock market break. You think it's mere coincidence that crude stalled out here, just like the stock market overnight? This looks almost exactly like NQ and ES, where it stalled out yesterday and today, and then had an impulsive move down this morning. That had nothing to do. Basically, it's showing you whether there were crude inventory. No, today's Friday. No crude inventories today. It's just showing you that the crude oil is once again, like it usually is, highly correlated with the stock market as far as how it's trading. So that's that. So if the market bounces from here, then crude will probably bounce too, and same thing holds true. That's still resistance 38.49. Ideally for the bearish case, to open the door to any of my next targets down here, and ultimately this one I'd like to see hit. I think it will around 35. We need to remain ideally above that 39.48 level. Not absolutely necessary. Here was a bounce to resistance, bounce to resistance. We went all the way up almost to the previous high before that big leg down and that last correction. So we'll just have to keep an eye on it. Like I always say, the charts are dynamic, and so is my analysis. We'll watch it, but like I said, I don't think we're going to go much above that 39.48, and ideally we shouldn't. But if we do, that's the next resistance up there, 40.50-ish. Okay, gold's starting to look good. Gold, mentioned the other day, it came up to that big multi-month trading range right there, 1791-ish. Had a divergent high, negative divergence, small wedge, and so at the time I was saying I don't think we just break out and keep on going. I do suspect we'll break out of that range and then have another big leg up in gold, but with the divergence and all that, if I'm not mistaken, I think I was looking for a pullback probably to this level and saying that would be an objective buy, and I think that holds true. We're just off it now, so what I'm getting, I think that's about the minimum and enough to satisfy these negative divergences that were put in place for as far as the correction goes. And so I think gold is an objective long there or here right now with a stop somewhat below there, Or, it depends on, when I say that too, guys, remember, if you put a tight stop like that, that's if you're only swinging for a move back up maybe to the top of the range again at about 1790. If you're positioning for a breakout, which is quite possible, from this point, you're talking a much bigger move that goes well above what's on here on this chart. If that's the case, then here's the next level. You can put a stop somewhat below that level down there, about 1740. In other words, you're going for larger gain potential. You can allow a larger loss potential and still have a nice risk to reward ratio, which says, I like a 3-to-1 or better. Typically risk $1 of loss for $3 or more in profit. All right, so that's gold. Anyways, that support, the divergences have played out, and anyways, those are levels to watch. And a little micro level right here. This recent that cluster of trading right there. We need to pop above that line, wherever that number is, about 1780 or so. If the market drops, if the head and shoulders pattern breaks down, I think whereas before, sometimes I look for silver to outperform. This time gold might be might outperform. That's sugar. I'm trying to click on SB. Sugar actually broke down and is now threatening to break that support. That's not what I wanted to cover. I wanted to click on silver. Again, silver, I've covered this quite a bit recently. We had the bigger bullish development, the divergent low right here. All this wash, rinse, repeat stuff. Divergent high, set up this correction, ended with a divergent low right here, positive divergence, set up this rally, but then after the breakout of the downtrend line right here, breakout, 2 back tests so far, and we also had this bearish rising wedge right there with the negative divergence, just like gold did, and so that was the catalyst for the correction in silver. And so if gold holds up, I think silver ideally should hold above this 17,454-ish level. And if it can break these recent highs, it's not super well defined, but I'm going to show you right about here. Lots of reactions there. If it can pop that, which I'm leaning towards, then it could move up. But again, I keep an eye on gold. I think it's more eyes on gold right now. The trading range in gold is better defined. This is not as well defined. It's a bigger, sloppier range with a big breakout over there. All these highs are not equal, so it's a little more difficult to identify a breakout other than that trend line breakout, and of course a break above these recent highs, which would be bullish. So but usually silver will move up with gold. In this case, if we do get another leg down, a decent leg down in the market from here over the next week or so, I would be partial to gold for more of its flight to safety. Its attractiveness as a flight to safety asset more so than silver. Silver has a little bit more industrial applications, so it's a little more dependent on how the economy is doing, or, well, in this case, that doesn't matter anymore. It's not how the economy is doing, it's how investors perceive the economy might be doing 6 months from now, regardless of how bad the numbers are right now. Okay, we're going to wrap it up here. There's that, so far, the reaction, what I like to define as a reaction in NQ. Reaction I define as a bounce and or consolidation when a support or resistance level is hit, and that's what that is so far. Where do we go from here? Hard to say, but usually you don't come on down, hit a neckline, and keep going. Usually you get one last reaction, then you break down. So, to be safe, say a break below today's lows in the indexes, SPY, QQQ, NQES. That would likely do the trick for give a solid breakdown of this head and shoulders pattern and open the door to the next leg down. Otherwise, bounce back up to resistance. What would that be at this point? I'll give you another level here on NQ, and then we'll wrap it up. Right there, you have that recent trading range right here. About 10.29. I'd really like to see NQ remain below that. If it gets there, that would be another objective short entry add-on for anyone that reversed here for a small bounce and plans to recycle back in. That's what I did. Actually did it during the video. All right, I'm going to wrap it up here and get it out to you guys, and I'll follow up if we see anything big today. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.